Hi, everybody. I'm here with Angela Coyne from Dominion Lending Centers to answer some questions that you've been asking me, and I figure that this is definitely best left to the mortgage professionals. Angela and I have been in business together for about the last 3.5 years, so I'll let her do a little intro and then we'll get right into the questions.
Yes, I've been a mortgage broker. Previous life was a bank manager, so basically been in mortgage banking finance my whole life. So yeah, we're in interesting times, certainly confusing for a lot of people, and lots of people are going through some very difficult times, but hopefully we've got some information today that'll help give a little bit of a pathway and explain some of the things that are going on.
Excellent, excellent. Okay, so we're kind of going to go in the order of the way that this all went down. So the first big announcement a couple of weeks ago was the drastic drop in interest rates.
Right.
So personally in my business, when those announcements came down, my phone started ringing off the hook with people asking questions of, should I be considering doing a refinance? Should I be considering getting an income property? What should I be doing with the equity in my home? So I'm just wondering how that first initial announcement, drop in interest rates, affected your business.
Certainly gave some momentum, I think, to the purchase market, which, as you and I both know, has been quite buoyant, although not necessarily enough product out there. I saw an increase in some refinances with people who were concerned about what is the future going to hold, because I think, as we're seeing now, things haven't just changed from week to week, things are now changing daily, so everyone is unsure. Certainly self-employed people, I found, were definitely looking to do some refinancing because they were unsure of how the year is going to look for them, depending on the nature of their business. And anyone who's in the leisure, entertainment type of role, obviously for them, things are going to be very difficult. So refinancing on both sides, it generated activity. But the interesting thing was, although the rates came down, we saw oil prices drop, and there was a lot of, unsure positions in terms of what's this COVID really going to do. And then after about 4 or 5 days, the rates started going back up again. So I don't know if people realize that, because a lot of the banks now have moved their rates up because they're worried about write-offs and delinquencies. So they're trying to protect themselves from moving forward.
Of course, yeah, and that's a really, really great point. So, which segues quite nicely into the next question that I'd like to ask.
Sure.
So with rates dropping and what you're saying, seeing rates actually go up, people are calling in. How difficult is it during this time for people to actually qualify for the supposed rates, even though some banks may have moved their rates up? How difficult is qualification right now?
It's really no more difficult, Greg, from the perspective of the formula that is used to qualify people, because for 2 years now we've been using the government benchmark rate, which is a lot higher than, you could be paying a rate of, for example, 2.79% on your 5-year mortgage, but you have to qualify. Well, it was at 5.19. It recently came down to 5.04, but it's still quite a big cushion in terms of how you have to qualify. So from that perspective, it's not harder to qualify. What I have found, which is somewhat interesting, is in the last couple of days, the banks are asking an awful lot more questions of purchases, and depending on what line of work they're in, even on a high ratio, Canada Mortgage and Housing Insured Mortgage, they're asking a lot of questions, and they're asking for some kind of assurances that this person's job is not just going to disappear tomorrow, which
Sure.
is a complication for everyone, right? Because a lot of people just do not know.
Yeah, it's true. It's very. It's nobody can predict the future, so that would be impossible to
Exactly.
Are there certain industries that, with these qualification questions, that the lenders are still very comfortable with?
Certainly, government employees have no issues whatsoever, and it'll be interesting to see what happens now with the government coming out yesterday with the list of what are essential services, what has to close, what can stay open. But in all fairness, if you're in retail and you're working in a mall, it's going to impact what you can do. There's no question about it. It's a sad reality, but it is going to have an impact.
Okay. And what would your advice be for people that have been deemed that their employment non-essential? Keep saving, stay the course, or should they be looking for alternative lending options?
I think that depending on how much money they have saved, if they're fortunate enough that they have 20% down, we may be able to look at alternate, what we call equity lenders that have a different criteria in terms of how much money or how you make your money. Your rate is a little bit higher, but they certainly have a lot more flexibility. So if you have 20% down, I still think there's opportunities for you to get into the market. But otherwise, for people, for example, if they work in the mall and the mall is closed down, they probably just got to stick with it and keep saving, hopefully, if they can save until they get back to work. But the one thing I did hear yesterday was that the grocery stores, such as Longo's, Fortino's, are ramping up and hiring people like crazy. So,
okay.
We always find when we're in a bad situation, if you want to call it, it's the best of times and it's the worst of times, because opportunities do present themselves. But I'm not trying to take anything away from the hardship that a lot of people are going through right now. It's a very stressful time for a lot of families.
Of course. Yeah, of course. And our thoughts are with all those families. We're trying to keep.
Most definitely, yeah.
Yeah,
I've been
trying
getting
to.
lots of calls about mortgage payments, that's for sure.
Yeah, no kidding. Which was another awesome segue into the very last subject to cover. So we've heard about the deferrals that have been made available by quite a few lenders. Now, one thing I'd love to get your opinion on is a deferral. We're hearing that this will clearly affect your credit score. The principal might be growing. What I'm curious about, would it possibly be more beneficial to people to perhaps do a refi, maybe tap into a home equity line of credit and use that to stay afloat with their mortgage rather than taking the deferral?
That's a great question, and I think it's one that has so many people confused about what they should do. For example, I've been getting calls from people who are, shall we say, very secure in their jobs, government employees. They're saying, well, I'd like to defer my mortgage for 3 months. Well, why would you like to do that? If you don't need to, why would you want to do it? Because what people need to understand, Greg, is deferring a mortgage payment is basically you're adding on to the interest that you're paying on that mortgage. Because even if the bank is saying, yes, we understand that you're in difficult circumstances, we're going to allow you to skip a few payments, your interest is still accruing on that mortgage. So it is costing you money. But for some people, that's the only option that they have. And certainly I'm glad to see that the banks are stepping up and making this option available to certain people. But it is on a case-by-case basis. You can't just call up and say, I'd like to not pay my mortgage. And if you haven't been affected by the COVID and the impact on the economy, they're not going to let you not make your mortgage payment. And if you are one of those people, I would strongly urge you not to be calling the lenders, because their phone lines are inundated with calls. I had a client yesterday, she was crying. Her husband works in a retail, he's lost his job, she's had reduced hours, and she was on the phone for 3 hours trying to get through to TD Bank. She did eventually get through. She got her payment. They're going to be okay and not have to make the payment next month. But the other thing you need to remember is, if your mortgage payment is due tomorrow, you can't call the bank and say, don't make my payment, because these systems are automated. It usually takes 7 to 10 days for them to change a pre-authorized debit plan. So the other option, if you think, well, I'll make sure there's no money in my account, that is going to affect your credit rating.
Yeah.
If you make arrangements with the bank and they say, yes, you're fine, we're going to give you X amount of time, it will not affect your credit rating. But if you just stop making your payments, it's not going to help you one bit.
Okay, that's great advice. I mean, the long-term pain could be more significant than the short-term pain if you go about missing your payments. If you do choose to use credit during this time, I mean, one of the benefits of being a homeowner if you have equity, if you, let's say, you use your credit card for a little while to make day-to-day purchases, you use a line of credit,
Yep.
you can refinance and roll that into a mortgage if
Yes.
if you're able to preserve your credit rating and depending on how much
Exactly.
equity you have at the time.
Exactly. The other thing too is if you're impacted because of job loss, but you have equity in your home, there's always money available. So for example, there's lots of private mortgage money available. And a private mortgage is something that I only recommend for a client in terms of it's a specific need and we have an exit strategy to get you out of this. So you might be paying an interest rate of 12, 13% on that private mortgage, but we're not going to keep you in it forever. And once you get back to work, we'll refinance everything and we'll get it wrapped in with your first mortgage and life is good. Better to have something like that. It's cheaper than a credit card usually, and it gives you access to some peace of mind, and you're letting the equity in your home work for you. You and I know, Greg, a house is probably the only thing that you buy that other than the odd recession that we've seen, and we saw one in 2008. We've got some issues with challenges now. You buy a house 5 years from now, it's probably the only thing you're going to ever buy that 5 years later is going to be worth more money than you paid for it. So, at times like this, if you have equity in your home, it can certainly alleviate a lot of problems.
Yeah, and we're seeing that as well. As long as you get good advice on how to use that equity.
Exactly. Don't take it to the racetrack, but yes.
Don't take it to the racetrack. No. So to summarize this call, I hope that everybody watching has enjoyed this. Make sure you get advice from your mortgage professional before making decisions. Get the numbers. Yeah. Don't be afraid to ask questions and take the time to make a decision that works best for you. We're here for you. You can like and post your comments below. Angela can be found if you Google her name, Angela Coyne at Dominion Lending Centers. You will find her. She's an invaluable resource, and always enjoy working with her. Thank you. And thank you for taking time out of your day. I know that you're in the midst of a lot right now.
It's you know what, the best thing that we can all do for each other right now, and we talked about we know that everybody's got to help each other in terms of being neighborly and shopping and things like that. But you and I are professionals in what we do, and we can help people too. And sometimes just having a conversation and speaking to someone who's not as emotionally involved in your circumstances, I think sometimes can really help. So I've spent a lot of time in the last days just talking to people and hopefully giving them a little bit of peace of mind that, we're going to get through this. Hey, this is Canada. We're going to be good.
We're going to be okay.
We are.
Too shall pass. This too shall pass. All right.
Okay.
Great. Well, thank you, Angela. You have a great rest of your day, and thanks for watching, everyone. And please reach out, like, comment, and subscribe, and we'll be happy to answer any questions you may have. Bye for now.
Bye.